last week we had a detailed discussion about audit process, planning to risk assessment stage. Are you clear about that? Last week we did clear. Hope that can go through that video day. Otherwise, it's very difficult. So you should know the link. The recently I am doing some trademarking about operator. Major weakness is they don't know what's the link between it and every procedure. So some of them are coming through other lectures. Some of maybe repeated exam papers. Majority the people who were in my lectures. 80, not 80%, 60%, they know the link in between procedures and stages. Other 40, other 20, some of the areas are they are aware about that. Other more than 10%, they don't know what's the interlink between audit procedures, audit stages. Then very difficult to answer the paper. All of that interlink between each and every stage and whatever the concept we are discussing in the classroom. So here and there we can hear different words, right? Audit risk, walkthrough, risk assessment, significant accounts, costs, and then substantive procedures, POC, the adequate audit evidence. Different words. So these buzzwords should be interlinked with the audit process. I always repeating, audit is a one lesson, one chapter. So for the work allocation and have kind of a timetable, we have done kind of a lessons, right? Area 1, area 2, area 3, likewise. But it's a one process, one lesson, right? So you can learn that as a one subject. So all the parts are interlinked. So it may be very easy. As I said, if it is a corporate reporting class, but the marketing or HR class, daily the chapter may be changed. But here I always discussing the same process. We started with assessment, mission stage, and we understood the control environment. Now we are at the end of the planning and assessment process. Planning and assessment. Right. Planning and risk assessment. The last week we had that detailed discussion with you all. We understood that our purpose first, we are going to issue a audit opinion over a set of financial statements. It means draft financial statement plus audit opinion equal audited financial statement. It's our duty. Right? To do that, we have to audit three things. We always repeating transaction, disclosures, and account balances. Disclosures and account balances are things we can see in the financial statement. The transaction we can't see. So the disclosures and account balances are coming in because of disclosures and account balances coming because of transaction. Transaction happening means the business is ongoing. There are different transactions. Because of these transactions, these disclosures and account balances may be changed at the year end. That's why yearly we need a statutory audit. As auditor, we have to check this. We can't check 100%. We can't check 100%. So that we have to issue assurance report We don't want to take 100%. We are issuing assurance report. We are taking sample selection, right? So then we are selecting what are the significant accounts and significant disclosures. We are selecting significant account and significant disclosures because we are not going to get all the disclosures and account balance. And then we can't select actually significant transactions. Why? We are having millions of transactions in the organization. From that, it's really difficult to select significant transactions. So what we are going to do is we are selecting what? Significant class of transactions. Significant class of transactions. First, we should identify what are the classes of transactions. So we have millions of transactions. We are going to class that based on the significant characteristics. What are the transactions related to PPN? What are transactions related to salary? And then cash. Likewise, we should have kind of the classes. From that classes, we are not going to audit all the classes. What we are going to do, we are selecting significant classes of transactions. Significant classes of transactions. Now we have significant classes of transactions, significant account, significant disclosure. It means so that what we said first, we have to do audit these three things, not for all these three things, but we have to do only significant. Significantly is relevant for stakeholder decision. Will change stakeholder decision, that means significant. So then significant, we have to base on that the expectation and perspective of the stakeholders. So then these numbers, these thoughts, these disclosures may impact expectation and perspective of shareholders, stakeholders, right? The expectation can be changed, the decision can be changed. That's why we are telling that these are significant accounts. Then that understanding is clear. I always repeating this. We should have that sense. And with this understanding, what we did, we calculated planning material first. Firstly, I am skipping that. We accept the client and we create a engagement letter. Now we have audit team. Right? Those things done already. Now we are going to do audit, right? Firstly, we planning material calculation. And then we did this selection. Significant account and significant disclosures. To do this, what we consider TE. Because it's transaction level, balance level, TE, more than TE balance. Other than that, we consider some other things. Based on the risk, what are the related party transactions? What are the sensitive accounts? And debit credit accounts. Debit credit accounts means in one account there may be millions of debit credit, but at the end of the day the net balance may be very small amount. But we have to consider that as a significant because it's containing different unusual transactions. Unusual transactions. Transaction which related to the manual involvement, related party transactions, legal type of expenses, and then estimates related expenses. So those things should be focused more, not based on the number. Another thing we discussed, once you are selecting significant account and disclosure, once you are selecting liability accounts, don't give that priority for the number. Priority for the number means if you are selecting, let's say, your PM, your TE, let's say 2 million, yeah, always selecting more than TE balances. More than TE balances. But in the balance sheet, we have two different risks. What are the risks? Overstatement risk and understatement risk. In the balance sheet, we have two different risks: overstatement and understatement. So then we are trying to overstate assets. We are trying to understate liabilities. So if there's a situation they are trying to understate liabilities, they are doing errors to understate liabilities, right? It means they have, let's say, 2.5 million liability. 2.5 million liability. And they are passing, they want to understand. They want to understand this. They are passing 0.75 error in same thing. And then now balance is 1.75. Now balance 1.75. Then you are selecting significant amount for more than 2 million dollars. Now this is 1.75. Because of this error, if you are selecting this method, you are missing this. Management trying to understand. I am selecting more than values. Two different approaches. Contradiction is there. So then my advice is what? Once you are selecting liability balances, don't depend on the TE. You have to evaluate the qualitative aspects and to select the significant accounts. You get it? Get it. So අපි නිකන් management එක try කරන්නේ අඩු කරලා පෙන්නන්න. අපි select කරන්නේ වැඩි වෙනවා. එයා වැරද්දක් කරලා අඩු කරලා පෙන්නනවා මේක miss වෙනවා. Then you have to consider that as well. Right. Right. So then we selected significant accounts and significant disclosure. Then next step we did step we select stocks. Significant class of transactions, right? So what is the logic? What's the guidance we have once you are selecting significant class of transactions? How many significant class of transactions you have to select? Significant class of transactions. How many you have to select? Yes, select 11. Okay. Yeah. So there's no such a number to select how many thoughts we should identify. What's the logic? What's the guidance? What to identify is first. You have to cover all the significant accounts and significant disclosures. So then once you are completing your escorts identification, you have to complete all the significant accounts and significant disclosures. So then why we are identifying escorts? Basic purpose is what? Basic purpose is what? So that we have disclosures and account balances, we have transactions, right? So these account balances and disclosures came because of transactions. Firstly, we should understand transactions. Right? We have select significant account and significant disclosures first. So then whatever the identified disclosure should cover an account and significant disclosures. Keep in mind that what's the relationship between significant account and significant disclosure with the scores. That's relationship with your understanding. Scores. So then after doing the scores, what we did walkthrough. We did a walkthrough. Why we did walkthrough? Whatever it goes, you have to do a walkthrough. A walkthrough after that. I think yes. Yeah. Control. To identify, design, and implementation effective the control is related to response. Design implementation so the hammer sports you know what are the related controls, what's the design, what's the implementation about the controls, about what? All the scores identified. The scores covered the significant accountant means in the balance sheet or P&L, whatever the identified significant account and significant disclosures covered through this scores. Through this scores. So after this, what we did? Combine this assessment. In plan. So this is about planning and assessment. Risk assessment under here, we have already discussed. Combine risk assessment. This is about what? Risk. Combine risk assessment. So I'm asking a question. Once you're doing your combined risk assessment, what are the sources you can use for getting information? What are the information sources used to do CRA, combined risk assessment? So basically, this process you got understanding and main critical source is walkthrough test. To the walkthrough, you are getting more information for the combined risk assessment. Compliance assessment you are doing to the which level? Which level? You are doing to the assessment level. It means the combined risk assessment should be evaluated to the assessment level. So we discussed about financial statement level and then assessment level. Financial statement level and assessment level. I hope you know. Otherwise, then the financial statement level and then assessment level. We have to do CRMO assessment level. Mama Excel එක කුත් කරනවා නේද කරපු CRM. Right. So then I'm trying to move to where? I'm trying to start the area number 3. So that's about gathering audit evidence, performing audit procedures, right? Then here, how I'm going to link this. So we have done with the audit plan. Now we are going to execute that. Execution of audit plan is gathering audit evidence. Right? We are going to execute this plan. Basically, we are going to do this project procedures, UOC plus substandard procedures. So here is there any questions, doubts? You may have doubts, right? So how we are going to do a walkthrough? What are the steps here? What are the considerations what we are doing walkthrough? Walkthrough is a kind of a audit steps. We have to go through the transaction flow. Transaction flow means initiation, processing, and recording of a transaction. So what are the transactions? We have many transactions, different transactions. Purchases, revenue, electricity, depreciation, and different transactions, salaries, capital infusion, grants, government grants, contracts, different transactions, payment, receipt, revenue, right? Different transactions are there. So you have to study initiation, processing, and recording process of transaction. So once you are doing once you are completing your walkthrough test, you should have what? You should have a flow chart of the process, and then proper documentation, and then control map. This is the outcome. You should have a proper control map, proper documentation, proper flow chart about what is books. So then you can understand. After this course, you know what is the related significant accountant. Here you can see one of a prepared control map related to one of a completed audit, right? The control map. After doing your annual thing, the walkthrough was designed for one of a leading bank, right? So I will remove whatever the confidential details and share with you all. So this is kind of a flow chart we developed for one of our audit. So then it's kind of a control map, right? Here we have what could go wrong. What could go wrong questions mean? These are the risks related to the process and then related control. So these are the related accessions. So that's what I told. CRA should be developed for accession level. So here we have the whatever the risk and the related control. So then this should be done after doing your walkthrough test. So what is relationship? So here we have risk and then the control is there. So if I have put the have mark here. So here we have the question how to ensure that all the checks are deposited to the bank. That's a question. That's a risk. What's the risk related? So the sum of the checks may not be deposited to the bank. That's a risk. For this question, we have an answer. That's the control. Uni executive attaches a deposit slip to the check deposit register after checks deposited to the bank. That's our number control. And then that was linked with this risk. Likewise, whatever the risk we have in this code should be interlinked with the control. So that is called control map. This should be developed at the end of a walkthrough test. So then, after you are doing your control map, you have many controls over there. The process you can see many controls are there. The large list of controls, number of controls are there. So then, as auditor, do we need to check all these controls? All these controls? Or need? The process there may be different controls. So as auditor, what we have to do? We have to select critical controls. What are the critical controls? keep in mind the new word, critical control. See, is that critical? Yes or no? We have put yes or no? Whatever the critical controls, you have to going to test these things. So then we have mentioned centralized or decentralized control agent, frequency of control, performed by who is the person performing this, senior manager or the executive or CFO or whatever the staff member. So you can mention that. Is that a centralized, decentralized? And then we have to mention the frequency. Frequency means frequency of the control. That happening daily, that happening monthly, yearly, or whatever the moment. So in the ATM machine, so they are rejecting. Sorry, they are submitting they are returning their ATM card before they are giving cash, right? That is the type of control. So that control may happen at what time? At the day, at the transaction point. Whatever the number of transactions, it will be happen. So it may be asset occurs daily. The frequency. Some of them may be monthly. See? Monthly, daily. Frequency of the control. So what's the main focus about this? We are going to do audit. We selected significant account and disclosures. Now we selected discourse. Now we have done a walkthrough. Through the walkthrough test, we are identifying whatever the number of risks we are involving related controls. We have control mapping now. Control mapping is there. By using this control mapping, what we can do is we can select whatever the critical control set. We can test under which stage. Test under which stage? At the POC stage. Maybe the product one of the control here. We have done with walkthrough. Means design and implementation. So then we are yet to finish operating containers. It will be tested under what? It will be tested under POC. POC is the option. POC is the option. You don't want it. It's not a must. You can decide based on your strategies, right? Keep in mind those things. Right. I will share these things. So then once I am sharing, so that I will remove whatever the confidential details. So that this may not include. So I remove most of the things. Again, can be shared with you. So you can just go through what it is, and if you are in an organization, so you can do this. If you are internal auditor or external auditor, get the understanding of the control design structure, you can develop a control map. So through this, you can identify what are the areas you are not going to cover, what are the controls you have. These controls should be preventive versus detective. You should have a mix, right? So those are the benefits you can get through this kind of a control mapping. As auditor, you have to do this. That's a byproduct. As outcome of a what? Outcome of a walkthrough test. After you doing a walkthrough test, you have flow chart, documentation about process, and control map. And then you are doing your combined assessment. So the last week I shared whatever the prepared combined risk assessment to the assessment level. So then you should know what are the accession level control. Based on that, you are doing your combined risk assessment. Based on this combined risk assessment, you are deciding your POC and substandard procedures. And then you are going to perform that. I hope that is clear. So let's say in the draft financial statement, we have a balance called cash. Cash, right? And then we commonly calculated PN. We selected cash as significant account and disclosure. Cash significant account, right? And then what are the assessments we have? Existence, completeness, and then valuation, right and obligation, and presentation and disclosure. Those are the assessments. Let's say cash 10,000. 10,000 balance should be understand and verified. And then we have this balance. To understand and do the walkthrough, we have to identify scores related to cash. So what are the scores? Cash, receipts, cash, payments, and then other scores may be related to this. PPE practice, salaries, also may impact to cash. Right. Once you are doing your salary payments, it will impact to cash. So then many scores may impact to one significant. Right. One significant. Right. So then you are doing your walkthrough for whatever the identified scores, cash, receipt, and payment. After you have completed cash, receipt, and payment scores, what you have? You have proper documentation for cash receipt and payment and control mapping. All things are there. So now we are going to evaluate combined risk assessment. Combined risk assessment for what? This 10,000 balance. 10,000 balance. What is existence, completeness, right and obligation, presentation and disclosure valuation. So the accession levels, we are doing CRA. What it means to you? Cash balance 10,000. How about valuation inherent risk? Plus inherent risk, you don't want to do much work. Judgmental and based on your experience and based on your company practice, you can identify the inherent risk. And then control risk, where did you get this information? Control risk done by doing your combine risk. Combine risk to cash valuation necessary. Combine risk to cash existence assistance. So as I said, you may have 4 types of CRA combined risk, right? 4 types of combined risk. That may be higher, that may be minimal, that may be low, maybe moderate level. So we have kind of chart, right? Here, inherent risk, higher, lower. Here, control risk. Reliant control, not reliant control. We have 2 levels. Inherent risk higher, inherent risk is higher. Control is not reliant control. The worst case. Inherent risk lower, control is reliant control. The best place. The risk is very less. So we may have different levels of combined risk. And accordingly, you are deciding audit procedures. So you are deciding what are the substandard procedures to ensure the existence, valuation. Based on this risk assessment, you are deciding that. You are deciding TOC plus substandard procedures. TOC is not a must, right? You can decide TOC, you are going to do TOC or not. That's a question, right? Can we discuss that? How we are going to decide this? How we are going to get a conclusion, get a kind of a plan to about TOC or not? How are we going to do that? How we are decide කරන්න? TOC කරනවද නැද්ද කියලා. මොනවද factors විදියට ගන්න? ඒකෙන් පුළුවන් ප්‍රශ්නයක් විදියට ඔයාලට exam එකේ. Will be tested in the exam. What are the areas you have to consider as auditor to decide whether you are going to do TOC or not? TOC is an option. Walkthrough is a must. Substantive is a must. But TOC is an option. So what are the things? From the walkthrough test, you are deciding that this related controls are not effective. So the under walkthrough, you are testing one, design and implementation effectiveness of the controls. You are deciding these are ineffective. It means ineffective design, ineffective implementation. Are you clear? It can be puzzle. Design එකම අවුල්. Implementation එකම අවුල්. Implement කරලා නැහැ. So then, are you going to test that again as operation? Only why? ඉතල බලපු එක ඔබලා බලන්න ඔක්කොනේ. තේරුමක් නැහැ. අපි already we have concluded that they have done an ineffective design and ineffective the implementation. So why you are going to waste your time to test operation effectiveness? So that you understood that design failed, and then whatever the implementation failed, and then operation means TOC means you are checking what you are going to ensure that. You are going to ensure this control happened during the period. That's the comfort you are going to get. If there is no such a design or implementation weakness, can you get a kind of comfort about all the controls happen during the period? No, never ever. So then you are not going to do TOC. Based on the conclusion you took from the walkthrough, you can decide whether you are going to do TOC or not. Some situation, walkthrough test says design and implementation is effective. Some of the cases, again, you are not doing TOC. Why? TOC කරන්න. එහෙම පැටියේ TOC කරන්න නැහැ. කියන්නේ බලන්න audit කරපු කට්ටිය. කියන්නේ design එකත් හොඳයි. Implementation එකත් හොඳයි. But we are not going to do TOC. What the last thing? I මොනවද? ඒ වගේ එක. What are the balances like that? Previous period. Yes. So then if there are kind of changes during the period, if that percent. Yeah. cover from the key item. So that's related to substantive procedures, right? So the key items mean it's a sampling element of the substantive procedures. So if you are telling the key items of substantive procedures, you can cover that. That's correct. But we can say like this. Understand instead for the cost effectiveness, we don't want to do TOC. Why? So the number of transactions may be very less during the period. So then we don't want to test TOC. Straight away we can do substantive procedures. So we can do substantive procedures for 100%. 100% each and every item can be tested. Why? During the period, the number of transactions may be very less. So we don't want to waste our time to do TOC. We can check substantive procedure 100%. Example is what? Maybe in a manufacturing company, loan and borrowings. Loan and borrowings. What would they do? Loan and borrowings kiya kitara? Loan take up kitara? Loan take up kitara? For two loans, we may have two agreements, right? So the loan take an agreement take installment. Capital plus interest. We are having the amortization schedule. And then you can check with the general ledger. So the capital reduction, capital outstanding balance, and the interest expense. Straight away, 2 hours job, right? So very straightforward. So if it is so, we don't want to waste our time TOC. We can straight away decide we are going full substantive approach because of the cost effectiveness. As your colleague said, through the substantive procedures, we can cover all the key items. We don't want to waste thinking about other things, right? Controllers. So how about the revenue? It is a manufacturing company. We can't do actually the full substantive approach for revenue. Why? During the period we are having millions of transactions. So we can't select the key item sample. So if you are selecting key items, it may represent more than 1,000 invoices, 5,000 invoices. So it will take another 6 months to check 5,000 invoices. So then, is that practical? So that's not practical. Audit quality review around 2022. Full substantive approach in Colombo manufacturing company. කරන්න පුළුවන්. හැබැයි අපි වුණා මේක මානව රිස්කි. That is not practical to do full substantive approach for a manufacturing company. Why? මම හිතන්නේ අපි අවුරුද්දෙම කියන transaction වලින් sample එකක් check කරලා තමයි කියනවා TOC. If you are not doing TOC, you have to have a kind of justification. Our justification was, what is justification? Their controls are not effective. The controls are not effective. It means you have to do extensive substantive procedures, not like in a reliable control environment. We have to do extensive substantive procedures. If it is so, during the period, there may be more than 10 million transactions. 10 million transactions. How are you going to select the sample to collect evidence adequately? Really difficult. So then, doing your audit strategy may be very complicated. So then, as auditor, what you have to do? Once you are designing your audit strategy, it should tally with your company risk, company nature, right? Basically, if you are designing to go with full substantive approach, that based on your cost effectiveness of the related balance and then go through test results. අමාර වෙලාවට last year experience and what we are movements and that. Stated capital. Stated capital is what college around there. Serious around there. In some other we are not doing at least a walkthrough. Why? Why? It is not a significant account. That's the reason. It's not a significant account. It's a limited risk account. It's an insignificant account. Stated capital. Why? So there's no movement during the period. Only when the fixed balance is there. Because of that, we are not doing at least walkthrough for stated capital. So whatever the significant account and significant disclosures which cover scores, we have to only walk through. If we are not selecting that as a significant account, it's not represent scores. For stated capital, there's no scores. After scores, go down. Cash issue, cash transaction, right issue. We don't have popular scores in auditing. Samahara companies are in during the period, right issue they got in the bonus issue, so they have the IPO also. So we may have a scores related to share issue. But commonly we don't have such kind of a score. Right? If it is so, we are not selecting that for to test. So then obviously we don't have a CRM for this. We don't have audit plan audit procedures for that. For stated capital, right? Because it's not a significant account. It's an insignificant account. Right. So here I am discussing whether we are going to do POC or not. Right? So that's based on basically your audit strategy, audit plan. And then now we are deciding combination of POC or substandard procedure or only substandard procedure. Based on that, we are summarizing the document. That's called audit plan, audit summary, audit plan and documentation. Whatever the terminology you can use, that consists with whatever the audit plan you decide. The planning, this plan maturity levels, and then whatever the identified scores and results from the walkthrough, summary of compliance assessment, and plus the plan audit procedures. That summary may be the audit plan for the audit. So once you are starting your audit, that is the guidance you are using. We have done the audit risk assessment for the accession level. We plan audit procedures. Now we have that booklet. Now we are going to execute that. So this booklet should be communicated to all audit members in the audit team. That correct? Yes. The maturity level should be communicated to all members. The walkthrough test results should be communicated to all members. Why? Why I am telling that? Audit team members return in Mama may score related to FD and savings. So I am focusing about that only. No, that is wrong. So whatever the score results should be communicated to others. Why? So the ones who are doing substantive procedures, definitely you should know the score results, audit process, flow chart. Everything should be with the audit team. That's about audit planning and risk assessment. Now we are going to start the podcast. So last week we had a discussion about experts, Indian the support, about estimates, going concern, and related parties. Right? We had a quick understanding about those areas. I agree to repeat that content again. So now I will do that. If you have any questions, you can ask. Right? So in this process, we can use different resource persons to ensure our understanding. as auditor. So as auditor, you know that he's a human being. He doesn't have 12 hands and he's not like a god, right? So then the human being, he has kind of a limited knowledge, right? Limited knowledge about the whole concept. Yeah, excuses man accounting that I can. Auditing standards that I can. He's expert about accounting and auditing standards, right? But once you are dealing with companies, so their manufacturing process, their business process may be very complex. Business process may be very complex. Let's say construction company, percentage of completion, right? Let's say manufacturing company like let's say plantation company, the cultivation, how we can assess the growth of a tea plant. That's about cultivation. Let's say it's a petroleum corporation. Petroleum corporation, they are having many tanks that as at the inventory counting stage, while tank again oil fill there. So oil purchase in the chartered accountant balance. So they are the expert knowledge they got for. They can make oil the killer, but I got one son there. They can about supporting a product. They can matter and you can put it again supporting inventory counting. So then we need expert support. That's obvious, right? It is an insurance company. Insurance liability valuation. Insurance liability valuation. What is that? We should evaluate the insurance contract liability. So as at the reporting date, how much of liability we have to pay? The liability adequacy test should be completed. For those things, auditors having limited knowledge. So then for that area, we have to get actuarial support. Have to have expert knowledge of that. Likewise, we are getting support from experts, valuers, actuaries, and leaders, doctors, different expert people, legal advisors, lawyers, and so then those outsiders considered as experts, right? The experts can be divided into two areas: management expert, audit experts. We know this management expert, audit expert can. Discussing this. So then they can use expert support. Maybe audit experts or management experts. Here we are discussing audit experts, auditors expert, auditors expert, auditor side can use expert. Some of the experts we can take from inside experts, inside the audit firm, internal experts. Some of them are external experts. The audit firm we don't have experts. We are getting support from outside part. Right? Internal expert and external expert. What are the internal experts? Tax experts are there. IT related experts. Valuation related experts. In audit firm, we are having different divisions, right? valuation division, tax division, IT division. So for these areas, we are getting support from those internal parties. So we can call as internal experts. Some of the areas we don't have that much of expert knowledge. So then what we are going to do? We are going to get external support. So we are going to hire a lawyer. We are going to get support from a third party valuer. What valuation report have company? Building it. Right? Building valuation report have company. So then we are going to test the value number. So then what we can do is you can check the valuer's qualification, whatever the inputs they have used, and the history about that valuer. What they may valuation and then the owner of the organization, one of the directors, close relation. So then there may be a kind of independent issue. So there's a challenge for your number. So what's the address risk? Risk related to the valuation decision of the building. So then what you are going to do? You have to get an expert support to value that. So then what we are going to do is, I don't have a valuation unit in our firm now. So we are getting the external value and we are sending this report and we are checking. So that we have a valuation report like this. You want to get this. I can agree with a number like this for this building. If he or she is satisfied with this number, so we can go with that. So then, whatever the appointed valuer from your end as auditor, he should be qualified, he has to have a proper experience in the evaluation, and then you can get that support. Why sure that big එකක් නැහැ කියලා business එක. එයා relationship කෙනෙක් නේද? Business එකේ you are doing the same thing, right? Once you are getting your expert to the flow, to the agreement, what are the things you need to consider? Experience plus independence. Experience, competence plus independence should be ensured to get the support. Otherwise, they may give a biased number to the manipulate asset base and the liability base of the company. So those are things happening in the market. In the kind of those can be legal frauds, legalized frauds, because the expert they are giving a number. They can tell that according to my expert knowledge, this is the number. So then we are using that number to the balance sheet. So we are boosting our balance sheet. So those can be happen. So basically, once you are doing IPO, initial public offering, so the companies want to show their asset base more. What they are doing is they are doing kind of a revaluation. They are getting high number to the balance sheet to show kind of a big picture about the company. So they are doing kind of a window dressing. Window dressing means at the 11th hour of the financial year, they are changing numbers to show kind of a artificial picture. To check that, to justify that, auditor should use expert knowledge. Right? It may be internal expert or external expert. What's your logic? Once you are appointing some kind of expert, what are the things you need to consider? Experience, competence plus dependence. එයාට වැඩි කරන්න පුළුවන්. එයාට biasness එකක් තියෙනවා. ඔය question එක අනිවාර්යෙන් exam එකේ repeat වෙන question එකක්. Once you are getting support from external party, that part should be independent and proper set of skills should be there. The latest paper එකේ තිබුණා. මම මතක් වෙන්නේ මේ ඊයේ රාත් paper marking කරන්න ආපු නිසා. Yeah. This exam paper, right? What are the main stages of an assurance engagement? What are the main stages of an assurance engagement? Make a technical, stages. So then some of them were mentioned like tri-party engagement, and then assurance report is there, and then framework is there. I'm asking main stages: planning, execution, and conclusion. Right? Mention key elements of the statutory audit LOE. What are the elements, right? Explain difference between fraud and mistake. What is the meaning of existence? Very easy, right? But they can anyone to make this clear. 26 February, no? I should get the August date. Questions? So, our past paper. On the latest one, I'm studying the latest paper. I couldn't get that. Can you try this question? So this type of 10 question may be included to your paper. I think after completing planning and risk assessment, you can attempt more than 1/3 of this 10 question. What are the key elements of audit opinion? What are the steps can be taken by an auditor to reduce the detection risk? Detection risk, right? The part of audit risk. Explain the difference between the high level assurance engagement and low level assurance engagement. Difference between high level assurance and the low level assurance. So what are the examples? High level assurance, audit engagement. Low level assurance, review engagement. Right? So what is the difference? It is a difference. Difference දෙකක් හරියට කියවන ලකුණු දෙකක් තමයි. දෙකක් මොනවද? Here we are giving high level assurance, low level assurance. The high level assurance means true and fair deal. Low level assurance means nothing has come from our mind to say that there are mistakes. That's okay, right? For this to give a high level assurance, we have to do extensive audit procedures. To give a low level assurance, we have to do limited audit procedures. Explain the key accession related to cash and bank balance. Key accessions. Accessions can know that make it key accession related to cash and bank. The balance sheet number, valuation, and then the completeness, existence, presentation, and disclosure line. For example, the significant part of transaction. For example, people, payroll, revenue, inventory, of course, not significant account. Right? So you should identify that. Significant account may be cash. What may be cash receipt, cash payment, that is cost. Right? So, till number 5, you can attempt now. Rest of the 5 maybe late with conclusion and execution. Right?
Correct. Correct.
This is the paper. About this, mention the four components of an assurance engagement. The question changed. The core component of assurance engagement, people are writing execution, completion, conclusion, risk assessment, not like that. A component means tri-party engagement, audit report, and then the framework, likewise. Right? So, what are the sources of evidence for risk assessment of a audit? What are the sources of evidence? Basically, the walkthrough test. Walkthrough test. Mention specific assessment related to significant balances in the financial position. So then the question changed. Previously asked what the existence, what are the assertions? Here, mention specific assessment related to significant balances in the statement of financial position. Specific. Don't repeat the completeness, right and application disclosure. Those are common. You have mentioned existence and validation. Existence and validation. You are mentioning others, not correct. Who is responsible for establishing effective control environment organization? The auditors kill a clear. All equation fail, right? Just the management of what clearly done. Internal auditor right? Management, directors, finance department, so that it's taking the management justify so that is right? Then, what's the relationship between walkthrough testing and test of control in a statutory audit engagement? What's the relationship? Question is, what's the relationship between? I'm not asking define TOC and walkthrough testing. I'm not asking that. So, walkthrough is the design. From the walkthrough, we are checking design and implementation effectiveness of the control. From TOC, they are taking operating effectiveness of the controls. So the answer is there. I'm asking, I'm asking, what's the relationship between the walkthrough and the TOC? You have to mention the relationship. What's the relationship? After you are going doing the walkthrough, you can decide whether you are going to do TOC or not. That's it. That's the answer. Don't need to hear the theories and everything. Very simple answer. That's it. Read the question and answer to the point. I'm asking the relationship. Don't get misunderstand, right? So the up until 5, this paper also you can attempt now. Be happy. People who reading audit now, so you can attempt 5 questions, right? So I don't want to, go through that. I want to come to here. This here, advice to your senior on the key factors to be considered when using a service of the auditor's expert for the audit of Harter PLC. Harter PLC is one of the company who is doing plantation with us, right? To do plantation valuation, they want expert support. So then once you are getting expert support for valuation of biological assets, so what are the things you need to consider? Basically what? Experience, competence, and the independence. These three words should be related to the case study and do kind of a more sentence or paragraph. Don't use more than 5 lines, right? Page එකක් ලියුවම ලකුණු 5ක් දෙන සිස්ටම් එක නෑ audit වල. ඒ තියෙන්නේ they 10 literature, right? So the one page 15 marks, 10 marks, right? So the auditing, no. So sometimes one page 0 marks. ඒ වචනේවත් හොයාගන්න බෑ page එකේම ගිහින්. page එකක්ම ලියලා 0. page එකක් ලියුවා වැඩක් නෑ. The word I am searching. මේකේ වචන තුන දැක්කම ලකුණු full marks දෙනවා 6 marks. මොනවද? Skills and competence, experience, independence. 3 words. 1.1 2 3 දාලා වචන තුන ලියලා තිබුණා ලකුණු 6ම දෙන්න. page එකක් ලියලා තිබුණා ලකුණු 6ම නැහැ. ගුරු ලියලා දෙන්න. case study එක ආයෙත්ම ලියනවා. case එකම ලියනවා. Useless. Asking the point with your knowledge, you simple answer. That's it. Right. So last week we discussed who is the internal auditor, how we can use internal auditor support. So the internal auditing is not a organization, right? It's the kind of a third level of control, third level of defense. If management want the third level of defense, they can establish an internal audit department organization, right? It's not a must. Internal auditors can report to directly to the board of directors or audit committee. Right? He's not reporting to CEO. So the CEO, CFO. So it's not a function under CEO or CFO. If the internal audit department under CEO or CFO, it's the risk. You can't use that reports for your purposes. What's the reason? They are not independent, right? CEO is the person who are leading the business. And whatever the frauds and mistakes they have done, they will need to find that from the internal auditor as well. So then you can use their reports for your independent assessment on all the company profile evaluation, whatever the audit procedure decisions, right? So then before you are using internal auditor support, what are the things you need to evaluate? Again, independence of the internal audit department and the competence. Are there any chartered accountants in the department? You have to evaluate that, right? Right. Those are things. Another thing is, if you are using this expert or whatever the outside support as an external auditor, you can't deviate from your responsibility. Keep in mind, right? Ultimate responsibility with you. From the audit opinion, you can't say that except for the valuation balance we are giving true and fair value because that balance ensured by a valuer. You can't say that, right? So whatever the support you are responsible, right? So then what we have to do? We have to read whatever the content they are doing and whatever the report they are submitting and we are getting. He is a kind of a supporter, he's kind of a servant or staff member to the audit team. Ultimate responsibility is the audit part. You can't deviate your responsibility. Right? Keep in mind, you can't tell that so we use only the internal auditor's report, so then they are responsible for this part. Do that. So it's just a support. Ultimately, you have to read that. You have to decide your conclusion. If you want to do some further procedures, you can do that. Right? It's up to you as audit partner. You can't deviate by using expert view support. You can reduce your detection risk, right? That's the basic understanding you should have. I have not mentioned here. That's kind of a general understanding you should have. As auditor, I may ask that question in the exam. As auditor, can we deviate? Can we refer the scope to outsiders, the experts' scope? Can we refer? Can we deviate our responsibility? Basically, we can't. So the ultimate responsibility is the auditor, right? So then we discuss about some key parts. The planning about related party transactions. As auditor, what are the things you need to focus? Related party. So we have auditing standard as well as a accounting standard. So in a related party transaction, we have three different stages. Different stages. What are they? Auditor should plan audit procedures on RPT recognition, measurement, and disclosure. So these are three different stages for related party transaction process. So as a management, they have to recognize who are the related parties, and then they have to use proper mechanism to measure these related party transactions, and all things, all the related party transactions should be captured in the source. So that is the related party process in the organization. So who are the related parties? What's the number? Are we going to display that in the financial statement? That process should be audited by the statutory auditor. To that, we should have a proper plan. Why we are discussing here at the planning stage? Is that a risky area? Yes, that's a risky area. Why? Related party transaction are the core area. So that we have to pay special attention on that area once you are performing your audit procedures. Why? They are playing around with related party transactions. But the current profit shift done. Value vehicle asset purchase done. Make company cash and company the 5 million land, 20 million purchase done. So we have to ensure the value. Otherwise, we are leaking cash in the outside company. So then, sales profit transfer material item 50 rupees. Profit transfer party company 50 150. So then, all of the profit will be transferred to from listed company to a private limited company. So that's a huge risk. So as auditor, we have to do that process. So the related party transaction is a very crucial element in the audit. Right? And ensure recognition, measurement as well as disclosure. Recognize Alut director related party recognize hotel reservation discount 75%. So then, if you are listed hotel, you have to capture that. Wow. Once you are putting your NIC number, to the system, you have kind of indication. It's a related party. There should be system control for related party. Otherwise, related party relation capture. So if we are using operating system, so whatever the identified related party should be embedded to the system, whatever the NIC numbers and the company registration. So once we are registering a guest for the hotel, we have to put NIC, right? So it indicated is a related party transaction. So end of the day, what we can do based on the related party narration, we can run a report. So in this year, so the related parties, they have done the booking this month, and this is the discounts we have given, right? So all those things should be there. That's the recognition, right? And then measurement. How are we going to measure that? What's the value we are giving? How we can compare with the market value, right? So are we using the fair value for that transaction? What are the discounts we are offering? So the discounts we are offering is relating to the company protocols. Like, so that we are having kind of a MOFA limits for giving discounts for related parties. So are we, complying with this? Those things should be evaluated. And then recognition, measurement, and some of the cases are there. They have recognized well, they have done proper measurement, so they are going to disclose only half of the disclosure. So all the things should be disclosed. So as auditor, what you have to do, you have to ensure that the proper related party process is there and the numbers are appearing in the balance sheet properly. So for that, we should have a proper plan over the related party process in the organization, right? And then, as I discussed last week, going concern, it's the presumption, right? So as auditor, we have to evaluate this first before you are starting your balance verification, because all the numbers were, the appears in the books with the assumption of this. So the company having a lifetime, company having a kind of a operation for foreseeable future. So that's the presumption we have as a management. So then as auditor, we have to justify that first. Otherwise, we can't give kind of an opinion, right? The company which doesn't have kind of a going concern ability, how we can issue a audit opinion. So then that basis, the proper basis should be used by the management. If there's a going concern doubt, what they have to do? They have to prepare the breakup basis financial statement. What it means to you? So in the breakup basis financial statement, you don't have current, non-current classification. You don't have book values. All the values are in market value, right? We are yet to sell it out the company. We are yet to, the liquidate the company. So we have to have a breakup basis set of financial statement, right? Right. And then estimates. Estimates also a critical area, right? Related part. Why? By using estimates, we can change numbers. Estimates mean we don't have exact number. We are having any judgment. We are having different inputs, observable or unobservable inputs. It is so, we may have a process to do the estimate. That process should be identified, control should be evaluated, and then whatever the numbers you are going to display in the financial statement should be verified by a auditor. Auditor makes it kind of a high risk estimate. Firstly, what you have to do, you have to identify the risk level of the estimate. We can categorize it into three: high level estimate, high risk estimate, medium risk estimate, low risk estimates are there. Based on that categorization, to identify the process, controls, you have to perform a walkthrough. And then you have to identify what are the controls to be tested. What's the audit strategy you are using? Right? According you can decide use substantive procedures. Example, for the estimate. Example for estimate. You should put out the estimate. Yes. And then the estimate, we are using new kind of a provisioning, right? For doubtful debts. So then it's kind of a high risk or medium risk estimate. Because it's related to the main operation. They give a kind of a significant number for provisioning. So then what we are going to do? We are going to calculate the ratio. So we have to evaluate who are the customers in our portfolio. So then individual significant customers. And then who are the collective impairment. loss ratio for the debtor provision. For the debtor provision. PD, probability of default. Probability of default. LGD, loss given default. EF, economic factor. Is a multiplication of these three elements. We can say that the future loss ratio. That correct? Probability of default. So that we have 20,000 debtor today. Right? There's a probability to default this customer. We have to calculate PD. So we have to evaluate kind of a bucket analysis. We can analyze that. There's a probability of 60% getting due. So then, what's this probability? You have to justify this. 60% is the probability of not paying this debt, receivable balance of 20,000. Probably are not paying, right? LGD loss given default. Because of this default, what is the exact loss? Maximum loss may be 100%. So then we may have some other recovery actions, right? So after having the default, you are taking recovery actions. You can take a legal action, or if you have kind of a guarantee, so you can use that. If you have some kind of a fixed deposit, you can use that. We have refundable deposit or something like that. You can use that. If it is a leasing transaction, you can seize the vehicle, right? So then by using, the recovery actions, what are the things you can recover? So then let's say there's a probability of 60%. After happening, you are having only 70% loss. You can recover 30%. 30% loss given default. Then given loss by the default customer. If there's a 100% loss, only 70% loss will be coming to the company. Right? Then this will happen in future days. So then we have to do kind of economic factor adjustment. Altogether, economic factor adjustment may be 110. So then, what's the loss ratio? 60% into 70% into 110%. 110%. That's the loss ratio. This loss ratio, let's say 42. 42 into 20,000 is the provision you are going to make for this balance. The above provision. This is an estimate. So we are using different numbers here. If you want to change this number, you can just change a kind of inputs 60% and 70%, 110%. This is four number, you can arrive with a different number. So as auditor, there's a high risk to ensure this. So then monitoring board, whatever the outsiders, internal department may challenge to this. So then you have to justify whatever the given assumption by the management, you have to justify. So then you have to plan your audit procedures over this. That's really important. So you have to take the risk, you have to design the strategy, you have to perform audit procedures over estimates. Like this. Not only this, we may have different estimates. So what are they? Gratuity, biological asset valuation, building valuation, IP valuation, tax, deferred tax, recoverability of deferred tax assets. Many estimates are there. Depreciation, useful lifetime, component depreciation, component depreciation can be done. Component depreciation. What are they? Another component depreciation can. the asset can be depreciated. Yes, part of the asset. But once you are doing depreciation activity, you can have the part of that, part by part. And identify separate parts in the total asset. Asset may be an element of different parts, right? Then make it and we like the other and the like a master they guy. Puna mas out of that. Sit down the target. The hotel lega, building home the depreciate current. Component depreciation current. Right? Hotel building lega, so then we are making a hotel building. So it consists of different parts. So the elevator, and then air conditioner machine, and then roof, and then paint, and then structure. Different parts. They say the make it the mother hotel building here. If you are using, the flat rate like 40 years for depreciation, it may not be viable. Why? Paint may be done within another 5 years time. Paint may be fully depreciated within another 5 years time. Okay, using the 40 years for paint depreciation, once you are repainting, again the value is there. So then what we have to do? We have to separately identify the cost we incurred for paint. That should be depreciated by using 5 years. Otherwise, once you are repainting, you can't capitalize that cost. Because still the paint cost is there, but we can't see that paint. For the paint cost already we have used that. Right? For that, we have to have component depreciation. To do that, we should have proper estimate of the components, right? Component. Right. That's it. So we can start gathering audit evidence. Area number 3. So now we have good platform about audit planning and risk assessment. So we started audit, we did risk assessment, we planned audit procedures. Now we are going to perform audit procedures, gathering audit procedures. It means executing audit procedures. Basically doing TOC plus substantive procedures for significant accounts and significant flows. Right? So that's our target. Do you need a break? So we'll take a break. Come back within another 15 minutes. 10:45 will start. Okay, 30. 10:45 will start. People who joining virtually, you all can have your break. Have a break and come back 10:45. So we'll do the very important part of gathering audit evidence. So actually, this is a part will take more time. Like 2 parts we completed, part 3 will take more time, more than 3 lectures. Right? So gathering audit evidence. That is nothing each and every balance. Simple. What are the procedures for inventory? What are the procedures for cash? Likewise, we are covering cash simple balance. So then you can use that knowledge for whatever the specific balances you are representing, whatever the industry is buying, right? Why is that by insurance industry ke liability valuation ke procedures I'm commonly discussing, right? So you can use that sense for other industries, right? Quickly take a break and come. If you think they perform break, you can done then that's again, you know, degree when I just I tell one degree then that's
Then
Area number 3, gathering audit evidence during an assurance engagement. Right? Then are we clear? So we are starting the second half.
Yes, sir.
Right? Okay. So gathering evidence during an assurance engagement. Gathering evidence. Gathering evidence means collecting evidence through audit procedures. In an assurance engagement, example we are focusing about is statutory audit engagement, right? Then we can move forward after doing the whole areas. So these are the areas you should know. The content we are going to discuss, right? With that, basically we are focusing about what are the information sources, documents, right? And then how we can use substantive procedures and DOC. And then different strategies, different procedures we can use for gather audit evidence. Right? Then as auditor, you know that we don't can't say that this is the exact procedure. So we have kind of a freedom to do alternative procedures, right? It means we are having different methods to obtain evidence and decide, right? This technological improvement, so the business world, business environment getting changed, right? They are moving from physicality to virtuality. So then they are having virtual, the scan documents, e-documents. They are in a virtual environment, so they don't have physical documents to change. So as auditor, what we have to do? We have to change our audit procedures, right? Then recognize and quantity and the quality of evidence. Quantity and the quality of evidence. Quantity and the quality. Sufficient and appropriate audit evidence. Sufficient means quantity. Quality means appropriate. As auditor, we have to gather sufficient and appropriate audit evidence, right? See, we have this words, sufficient and appropriate. Identify the circumstances in which calculation of expectation from management should be and the reliability of such. What are the stages? What are the balances you have to get special representation from the management? Representation from the management as audit evidence, as a kind of a confirmation we are taking from the management to get kind of a strong representation from the management, right? So these are the areas we have to focus throughout this area number 3. End of the day, we should know this basically. We have to handle whatever the questions, whatever the repercussions in the future commitments. Like if you are auditing or in the future, you should know this content after doing this area number 3. Basically, it's a talk about performing audit procedures related to balances and disclosure, right? E. Sufficient and appropriate audit evidence. Sufficient and appropriate. So that's the kind of a judgment you can take. But which point you have to decide sufficient appropriate. That's based on your experience, your judgment. Are you satisfied with this evidence? Can you decide that whether it's true and fair? At that point, you have to stop. Otherwise, we have a deadline to finish this audit, right? What now we come audit in the back. We have a deadline. So then you have to satisfy. So which point you are satisfied? That's your judgment. Sufficient and appropriate audit evidence should be collected. Sufficient means quantity, materiality, and then appropriate means the quality. Quality evidence, genuine evidence, or trustworthy evidence. The evidence quality should be there, but you're gathering evidence, right? Then quantity, number of evidence, number of key items you are going to test. That is the quantity. Quality versus quantity. So then basically you are going to check rent expense. Rent expense. So what's the required, what are the required evidence you are going to test? You have to decide that. And you are going to check that. And then you can evaluate whether it's adequately done. Adequate means quantity and quality should be maintained. Quality, rent expense and quality parameter. So once you are evaluating the rent expense accuracy, you are checking the accuracy of rent expense. Right? Occurrence, measurement of the rent expense means can refer bank statement, right? Can refer rent agreement. Rent agreement should be a kind of original document. So the quality may be ensured through original documents, right? Not photocopies. People can change photocopies, right? Create photocopies, right? So then quality evidence always depend on original documents. Quality evidence always targets the outside parties, third party evidence. Why? External evidence may give quality assurance rather using the internal evidence. Why? More trustworthy than the internal evidence. The internal parties can take the then. We are getting third party, some outside confirmation. It's giving more kind of a comfort, right? About the numbers. Let's say bank confirmation for banks. So it's giving more the strong audit evidence from third party. Data confirmation, creditor confirmation. So always focusing about quality evidence from outside party. Likewise, we have to have kind of ability to evaluate this evidence, whether it's adequate or not, quantity versus quality, right? Keep in mind these two words. As auditor, we have to gather sufficient and appropriate audit evidence to reduce audit risk to acceptable low level before you are issuing the audit opinion. If it is so, you can issue quality audit opinion on time. Then we are discussing about type of audit evidence. Different types are there. We have audit evidence. We are dealing with audit evidence. We have different types. What are they? Different types of audit evidence are there. Are they internal evidence, original documents, oral evidence, written evidence, photocopies, different set of audit evidence, right? So you can decide the quality. reliability. Quality reliability depends on the source, whether internal or external, right? Or photocopy or original document or duplicate document, or written document or oral document, right? So you have to have that evaluation, whether it's reliable or there is quality. You can justify it. If it is external, it's quality. If it's original, it's quality. If it is written, it's quality. If it is oral, if it is photocopy, it's internal, less quality. ලොකු يعني ලොකු පොලයක් කියනවනේ මේක quality කියනවා. So you can evaluate that, right? So you can take an example and you can think. There's a land deed, or you are purchasing a land. Okay. But management land purchase karati. The oral communication. So are you satisfied with that? So what you have to do? You have to check the original deed. Original deed, right? So then original bank transfer documents. And then we have to check the written documents. Can't depend on the oral document. So then external confirmation. You can check the bank statement, right, for the cash payment. So you can you can check the correspondence with the third party, like the seller. You can take third party confirmation, right? So those things, the general things, right? That evaluate whatever the evidence. But once you are doing evaluation, you have to justify the quality versus reliability. Quality and the reliability should be ensured as origin. You may have different sources like this: virtual evidence, physical evidence, right? So at COVID period, so evidence gathering may be very difficult task. Why? So then imagine in the COVID period, we had inventory verification. Inventory verification, virtual inventory verification. So we can't, the travel here and there, right? So what we did was, we did virtual verification. Previously, we did physical verification, but we moved virtual verification. But quality work is doing physical verification. Right? Once you are doing virtual verification, they can play around that. They can show same inventory item so that they can turn camera to this side. They can show that. So they are transferring that item to the other room and they can show that as well. Right? So then we should have proper protocols once we are having that kind of a virtual inventory verification. So that's also in evidence gathering process, but different evidence. Right? And so we may have barcode system. Some of the evidence we can't get access, kind of a scope limitation, right? What are the evidence like that? Standard costing formula. Standard costing formula of the Munchie. Standard costing formula of elephant house. එයාලක calculator බලන්න. ඇයි ඒක දුන්නොත් recipe එකත් උඩට දෙනවා. උඩට දාලා නෙමෙයි elephant house company එකක් ඊට පස්සේ දාලා. So they are not willing to give that. So then without the standard costing formula, you can't decide, the WIP, the value of WIP, inventory valuation. The accuracy of inventory valuation can't be tested as audited. So then we have to suggest alternative audit procedures over there. That alternative procedures should have that quality aspect. Reliability should be there. Up until the reliability, you have to suggest alternative procedures. You have to satisfy with the numbers and the process. That's about audit evidence, right? So whatever the evidence you have to do that evaluation. You can decide whether it's internal or external, right? Input information provided by them. IPE testing. That's the kind of common discussion nowadays. Information provided by them. So are you satisfied with that? If at the information that at the those are, you know, the many information are there. So the set of information, the reliability of information is the doubt. So before we are ensuring the reliability, we should have proper understanding of the process, internal systems. What are the systems in that organization? Internal systems, front end and the back end. What's the operating system? What's the general ledger? So is that a one system, ERP system, or different systems are in the organization for the operational purpose? HR may be handled through HR system, and the operation different systems, DA different system. In between these systems, manual intervention is there. So there should be a reconciliation process, right? Likewise, you have proper understanding about the company information circulation structure. So then only you can confirm that this given information at a good level, right? That's about basic information. So that hereafter, whatever the audit procedures you are doing, you can relate to this. What is the evidence you are getting? That internal or external, what's that original document? So through these audit procedures, what's the expectation? We have to ensure the quality and we have to ensure the reliability. Right. Examples. Here internal, external. What are the internal things? Observations, internal reports, inquiries, recalculations, internal audit. The internal, right? External. So the market research report, confirmations, compute the data, valuation from independent valuers, expert opinion from independent lawyers. So those are external things. So then once you are deciding these external things, you have to evaluate the independence. Lawyer should be an independent person. Independent valuer should be a obviously independent person. Otherwise, you are not getting the correct picture, right? Ultimately, we are gathering audit evidence to ensure the assistance. The assistance was given by the management to the public. And as auditor, we are going to give a audit report. We are going to do audit report. That audit report should contain an audit opinion, right? Audit opinion says these balances are true and fair. True and fair means we are agreed with the assessment given by the management to the public. Example, so the management side in the balance sheet, under the balance sheet, right? So they say, as at the reporting date, their PPE balance 50 million, PPE balance 50 million. So it means they are telling to the public, as at the reporting date, they have PPE 60 million the existence. All the asset and buildings, all the things exceed 60 million assets. We have the right and obligation over that asset. And the valuation is correct. All the buildings were in this 60 million completeness. So then we are complying with LKS 16, presentation and disclosure. So that is the story they are telling through the signature. They are telling that to the public. So then, as a bit of what you have to do. So whatever the communication they are doing, we have to evaluate. To do that, we have to perform audit procedures. Before that, what we did, we evaluate the risk over that statement. Assessment level This was assessed now. We have decided procedures. Now we are going to perform audit procedures to the assessment level, not even to the balance level, not even to the balance sheet level. Balance sheet level to the balance level to the assessment level. We are checking not the PPE balance. We are checking the existence of the PPE balance. Right? We have to perform different procedures. How we can give the conclusion to the balance? By ensuring each and every assessment. Firstly, we have to perform procedures to what? Valuation or existence assessment. We will take a existence. So then, after ensuring that, we have to ensure the valuation. The given value is correct or not. We have to ensure that. Valuation have we considered all the buildings to the balance sheet? Completeness should be ensured. Valuation all the balance sheet. Some of the buildings we can't use, we don't have the control. We have to ensure that as well. So then only you can give the conclusion to the balance. Then we can say that PPE balance is true and fair. Only the PPE balance. If we want to give the conclusion to the balance sheet, we have to ensure cash balance and other balances as well, right? So the balance sheet is okay. Can we satisfy with only the balance sheet? No, we have to satisfy with the P&L as well. And then the cash flow and other disclosures. After getting that confirmed, only you can issue the bit of PPE, right? So then we have to work to the assessment level of the account balances and disclosures. That's simple, right? I'm a relay of my care. Like, I don't give it. Exam. So, pass in the get the understanding first. Hearing that, so if you can't understand what it is, what Mulvika say, yeah. Yeah, so I'm looking at I'm dealing with the exception bench, right? So that you have good connection with the auditors and the client places or whatever the places you are representing. You have external auditors, you can talk to them, so that you have many resources, right? Again, we done on that. Again, objective, but at the end of the day, you should know auditing. There's no excuse for that. But a YouTube can talk to your colleagues, talk to me, talk to your colleagues in the classroom. Whatever we get that, what is on other people, you can get a record. Another day. Example pass every day. There are hardly use the exam pass is a byproduct of the lecture series, right? So the target is to be a auditor or auditing in near future. Definitely you have to do that, right? If you are accountant, you are the auditee. If you are the auditor, if you are the internal auditor, you are the auditor. You have to perform this. So if you are the auditee, others will perform, you are maybe audited. So to ready for that, as a certificate, getting for the applied accounting degree, you are getting ready for that. That should be there. Right? Then they are benefiting the pass and bigger. Mama may degree that below that. So that after getting this qualification, it's obvious that the presumption I'm hiring an auditor. I'm hiring a person who are having PO audit and finance knowledge. So that's a certificate they are giving. If it is so, we have to give assurance from the SAP to them. To give that assurance, we have to ensure that we should have that knowledge. Assurance again, the assistant we have to apply to that. Right. To do that, to get that audit assurance, we have to perform two different audit procedures: test of controls and substantive procedures. So these are basic audit procedures: test of controls and substandard procedures. This is kind of option. It's the option. The must. It's the option. You see, it's the option. Why? I always repeat it. If there's a poor design, poor implementation, we are not going to test again. Based on the cost effectiveness, sometimes we are not going to TOC. We are moving to the straight away substandard procedure. Right? It depends on the audit strategy, depends on the management expectation, depends on the the experience you have, depends on the judgment you have. In an audit, we may have hybrid approach. Some balances we are doing TOC, some of them we are not. It depends on the audit strategy, audit plan, right? These are basic audit procedures. Inspection, observation, inquiry, confirmation, reperformance, recalculation, ARP, analytical review procedures. So the types of audit procedures, different types. The recalculation can be used as a TOC or substandard procedures. Recalculation, right? The performance also say confirmation also say can use that as TOC or substandard procedure. The TOC, the area you are focusing, design, implementation effectiveness, and the walkthrough testing. Right? Operating effectiveness through TOC. So you are getting what's the answer? Rely on controls or not rely on controls? Right? So then you have to embed that to the risk assessment. Moving after risk assessment taken from my done. Slow material mistake. Make a main picture on local they are made here. කියන්නේ අපි lecture පටන් ගත්ත දවසේ ඉඳලා අද වෙනකන් කතාව මේ slide එකේ. All slowly you can see from this here. और මේ slide එක ගැන විනාඩි 15ක් වගේ presentation එකක්. That's really good, right? So evaluate yourself and understand this. So can I do kind of an explanation about this slide? Self-evaluation. Can you do this? So then you have to explain about the control and design, implementation. Design is what? Designing who, how, what, when. Control features of the control, right? Implementation, we are implementing that. And operating effectiveness, we have to operate that for a period, for the year. Walkthrough test, there's an activity under planning and risk assessment. Walkthrough test we did for all the scores. ඒක අපි දැන් අලුත් දෙයක් නෙවෙයි නේද? හැම ස්පෝර්ට්ස් එකකම walkthrough එකක් කරනවා කියන එක හැමදාම කියන්නේ. It's not a new thing. We are doing walkthrough for design and implementation effectiveness evaluation. And after you doing that, you have to do risk assessment. Again, they are telling something. After doing operating effectiveness, TOC, again you have to do the CRA. What it means to you? Right? Previously what I did? I told you like this. I told you after walkthrough, what I request, you have to do the CRA. So that's the concept we have. This chart also saying that after doing the walkthrough, you are having the answer reliant control or not reliant control. You have to do the risk assessment. That is combined risk assessment. What is that? Control risk versus internal risk. You are getting answer for control risk from what? Walkthrough. That's why I told you, once you're doing risk assessment, what are the sources you are using? Main source is walkthrough. Other than that, you may have some other. So then what we're going to do here, from here, test of controls. Again, I'm doing so test of control under where? This is under execution stage. Execution stage. Here, it's under planning stage. This is under planning stage. This is under execution stage. So then you are getting answer from test of controls. Test of controls. So then are you going to do risk assessment again? What it means to you? So now we have done the risk assessment. You plan on the procedures. Now we are going to do TOC and substantive procedures. Again, we are doing TOC. We are taking operating controller. Again, we are getting that conclusion. Reliable controller. So we are listening to the what? Combined risk assessment. So then again, now you are going to do risk assessment. Then running it. So then we are doing operating controller. The DOC. Then again, you have to adjust the comparison. So we need to do that. Oh, and what we are doing then? Do that. So what's the impact to the final results? So then again, are you going to do this comparison? Revisit. Yes, that's the word I want. You have to. That's the word. You have to revisit your risk assessment. That's the word. Revisit your risk assessment. Revisit. Reassess or revisit. So you did the combined risk assessment after walkthrough, right? So then you done with the planning and risk assessment. You have already done. Now you are executing. Under execution also you do operational testing about the control, TOC. What you are doing TOC, if there's a conclusion about reliable control, not reliable control, what you have to do? Before you are doing substantive procedures, you have to revisit your risk assessment. Reassess your risk assessment. Keep in mind, what are the steps you did? We calculate the planning materiality and select significant account and significant disclosure. And then select scores, perform walkthrough. Then, so the countdown fingers and you can mention, right, steps. Significant planning materiality calculation, significant account and significant disclosures, and then scores, and then walkthrough, and then combine this assessment, right? After combine this assessment, according to the assistant level combine this assessment, you decide on procedures for balances, and then you prepare the planning document. So that is planning and risk assessment done. Then we are starting execution. Execution means performing audit procedures, means TOC plus substantive procedures. So under execution, we are doing TOC. So my request is after doing TOC, you have to again reassess the combined risk. Reassess the combined risk and do the substantive procedures. What TOC කරපු ගමන් substantive procedures කරන්න බෑ. එතකොට සම්බන්ධයක් නැහැ. But then on relationship like this is very critical. නිදාගෙන ඉන්න කට්ටිය අහගන්න. නිදාගෙන ඒ කියන්නේ එක mode එකකින් විතරක් ඉන්න. Only the physical mode, mentally, intellectually not in the class. ඒ කට්ටිය අහගන්න. So then what we are going to do? what I'm going to mention here, the relationship between the TOC and the substandard procedure. This TOC, what you're going to take, operating effectiveness of the operating effectiveness. So once you're doing the operating effectiveness of the control, my request is again you have to assess that to the combined risk assessment. Why? What's the reason? Then you are going to start your substantive procedures. Once you are starting your substantive procedures, you are based on the scope, right? You are based on the kind of the scope. That scope may derive from the combined risk assessment. Right there about that? That scope may be derived from where? See? TOC results due to answers. Rely on control or not rely on control? TOC is that a must task? No need, right? So then there may be some other approach. Supersede TOC. Supersede TOC, directly we are doing substantive procedures. Directly we are doing substantive procedures. That's another approach. One approach is there, we are doing TOC and getting the answers. Then reassess the combined risk assessment, doing the substantive procedures. Two different approaches. Without TOC and TOC. Reliant control approach and not reliant control approach. Different strategies are there. Right. So once you are doing decide is substantive procedures, you have to reassess CRA. Reassess CRA. What's the reason? So then you are going to decide the scope of substantive procedures. Scope of substantive procedures. To decide that scope, how are we going to decide that? Scope definitely you are getting from where? The percentage from TE. The percentage from TE. The scope. This percentage may be decided based on the RA. That percentage, whether it is 20% or 30% or 40% or 80%, may be decided based on the relevant CRA for that assessment. Right. Target combine this KK, inherent risk plus control risk. Answer. It is too high. Inherent risk higher, control risk also not reliant control. Answer. Within the answers, types key can පුළුවන්. Type key can පුළුවන්. අතරක් එන්න පුළුවන් කියලා කියලා තියෙන්නේ. There may be four answers එන්න පුළුවන්. Four answers එන්න පුළුවන්. මේක 4 answers එන්න පුළුවන් විදිය තේරෙන්නේ නැති කට්ටිය ඉන්නවනේ ප්‍රශ්නයක්. ඒ කියන්නේ forecast ඇවිල්ලා නැහැ. ඒකුලෙක් එක ඇහිලා නැහැ. වෙන ලෝකෙක ඉඳලා නේද? මොකද වෙන්න පුළුවන් අතර inherent risk වෙන්න පුළුවන් higher and lower. Control risk not reliant control or reliant control. Correct? item දෙක තියෙනවා type 4ක් එන්න පුළුවන්. Inherent risk higher, not reliant control. Inherent risk higher, reliant control. Inherent risk lower, not reliant control. Inherent risk lower, reliant control. Different combined risk. According to this different combined risk, it may be high or minimal. If it is high, how about the rate we are using? The 20 or 80? 20 or 80? 20 to 80 is high. 20. Huh? 80 is 20. 20 use කරන්න නේද මම මොකද කිව්වේ AC remote එක on telescope එක the scope is 20% of the if it is high risk why the scope the level you are checking 20% of the not be 80% of the so that number may change through the CRA number may decide the CRA. It means that number that number may decide through the CRA. Right? CRA may decide through the what? TOC and walkthrough. Right? So then what is the relationship between the TOC and the substandard procedure? So now I'm telling the relationship between the TOC and the substandard procedure. What's the relationship? TOC may give the results of reliant control or not reliant control, right? That will assess the control risk. Right? That's a part of the combined risk. Combined risk assessment may be used for decide the scope of the substantive procedures, right? So if we are getting not rely on control answer, your scope may be higher. If you are getting rely on control answer, your scope may be very less. You have to do very less substantive procedures. Okay, මොකක්ද කියන්නේ? Control environment එක හරි නැති company එකක නම් පොඩක් substantive procedures right? If you are in a company, you don't have the design, implementation and operation fail company about controls, increase you have to do more substantive procedures. That's the relationship between what? TOC and the substantive procedures. So then if you are doing TOC, if you are not doing TOC, get away. Not reliant control. There's no argument. You have to do extensive substantive procedures. That's obvious. I hope you are okay. You can ask questions, you can challenge. With your practical knowledge, people who are joining virtually, you all can challenge. Anything you can't understand, I can repeat. I always repeating in other days also, so I can recap these things. I am planning to do kind of a revision as well. So there's no chance to repeat this exam. This paper is one of the mental case 11 out of 100. So that's not about my mistake, I guess. My mistake has the pattern I am marking. So 95 out of 100. 95 means my mentality, my expectation 100% achieved. 95 marks from 100. Really happy, right? So the 11 from 100. It's better to not to come for the exams. Basic audit subject එක නමවත් දන්න කියලා. එහෙම දන්නව නම් බොරු කට්ටිය කියන්න පුළුවන් 10ක් ගන්න අපෝ නේද? So the very simple subject, simple flow. I can finish this lecture series within 2-3 lectures. If we understand that, but revision lecture දවස් එකක් කරන්න පුළුවන් මොන subject එක. Very easy. තේරම explain කරලා ඉන්න තියෙනවා. So likewise, very short subject with new subject, you have to learn this, right? That's a request. Learn with the link, understanding. Otherwise, if I am giving a new case study, so last time tested the Premier in Sri Lanka Premier League. So the once you are having a having a TV channel, once you are broadcasting it, so the revenue, how you are going to audit the revenue recognition of that Premier League telecast. Right? What you are doing, what procedures. Likewise, practical things may be tested. Right? So to do that, you should know the subject. Otherwise, poorly understand. Poorly you don't know. So the law of amendment. Paper again the channel. Clip the booklet take a color. Short and sweet answers to the point. That's a requirement. That's auditing. Auditing is kind of a very sharp language. But you use that, but use correctly. Right? Okay. So this is the basic flow. Whatever the balance, down balance of disclosure you are going to verify, this is the basic flow you have to follow. Right? Follow both upstanding procedures. Opening balances with the previous year working papers. Review general ledger for unusual records. Agree client schedule to perform account record to ensure completeness. Carry out analytical review. Test transaction in detail. Test balances in detail. Review presentation and disclosure accounts. That is the basic flow. You can add some more things to this. To ensure a balance, to ensure a disclosure. Things. What are things? We have to compare with the opening balance. We have to extract opening balance correct. Extract opening balance correctly. And then review the ledger for unusual balances. Carry out analytical review to the balances and test transaction details. Test balances in detail. Review presentation and disclosure in account. Basically, substantive procedures. Audit procedures can be divided basically into two. TOC plus substantive procedures. Right? Other than that, we may have other general audit procedures. Other general audit procedures like board minutes and then JE testing and post balance sheet review. And then what else? Legal background review. Likewise, you may have some other procedures, right? Other procedures. Basically, we have TOC plus substantive procedures. As a strategy, this is an option. Again, I am telling. There may be having hybrid approach or full substantive approach. Right? This is option. Once you are doing substantive approach, you may have what? Other substantive procedures, OSPs or PSPs, primary substantive procedures, or else other classification, TOD or ARP, test of details or analytical review procedure. OSP, PSP, primary substantive procedures. What it means to you? primary substantive procedures. I have not given this definition in the slide deck. Primary substantive procedures and other substantive procedures. Without considering the risk level, without considering the CRA. Whatever the CRA you have, this procedure should be done. This is a primary minimum procedures required from the standards related to the relevant balance. That is primary substantive procedure like primary education, primary needs. As a human being, you have to eat food, right? Food, education, those are primary needs. So primary substantive procedure. If it is inventory, physical inventory count is a primary substantive procedure given instruction through the auditing standards. That's a minimum procedures we have to perform without considering the risk level. So those are the procedures, primary substantive procedures. Other substantive procedures, based on the risk, based on the high risk, auditor can decide some other procedures. Other substantive procedures, there's no strict, the guideline, strict guideline in the sense, there's no such a definition for each and every procedure in the auditing standards. So that is subjective to the risk level of the balance. That's subjective to the relevant auditor. They can decide. This is judgment. That's based on the auditing strategy. Other substantive procedures. Right? Then again, you can divide substantive procedures into ARP and TOD. ARP, analytical review procedures. Analytical review procedures. You can analyze numbers. You can analyze numbers and you can justify. And then TOD, test of details. What are the examples for test of details? What you can do? But testing in detail. You are checking vouchers. You are checking deeds. You are checking original documents. You are not depending on the analytics. You are checking original documents. It is test of details. Detailed checking. If it is a high risk area, you have to check original details. You can't depend on the ARP only. You can't depend only the ARP. You have to do TOD if it is high risk area. You can use hybrid approach, ARP plus TOD. To do ARP, you have to in a good IT environment. The information process may be covered through good general controls. Why? You are doing ARP based on information, right? You are doing analysis based on information. If you are getting wrong information, you are ending with wrong conclusion. Right? Before that, you have to conclude that you are in an environment with good ITGC, IT general controls with information processing hubs. The report should be perfect. Information given by the entity should be correct to do the analytics. While system report you are ending with the different conclusion. So some systems are there. So then your front end is correct. System also correct. Once you are generating a report, capturing only 2 elements. 4 elements are there. Completeness fail. So then you have to ensure that whatever the given numbers, the environment should be in a perfect environment to do analytics. Then only you can trust upon the ARP. Otherwise, you have to depend on TOD, test of details. So that's about basic classification before we are moving to balances, right? Before we are moving to balances. Okay. Here we have example what we discussed, right? TOD versus ARP. Now the TOD, read agreement, checking vouchers, taking deeds, review board minutes. We are checking the original documents, text of details, right? Or basically vouching. Or then exam එක ලියනකොට checking original documents කියලා ලියන්න එපා. ලියන්න මේ වචනේ. මේ අතේ ලියන්න හරියවිද ලියන්න ඕනේ මේ වචනේ. Because audit is a kind of a language, right? We have to use that buzzwords. So the auditor should perform test of details according to the risk level. So that's the language we have to use, right? So the test of details like test of details like read the agreement, read the board minutes. මේක ලියන්නව නම් ඕන එකකට ලියන්න පුළුවන්. Hello, ලියන්න එපා. TOD for the අපි ලියනවන receivables වලට test of details by checking the deeds. එහෙම ලියන්න එපා. ඒකට relevant වෙන්න ඕන balance එක. Relevant වෙන විදිහට මෙතනින් තෝරලා ලියන්න තියෙන procedure. That's very easy. This is a common background. If it is debtors, maybe vouchers. If it is a land, it may be deeds, right? If it is a the creditors, it may be the agreement. It may be a loan or borrowing, it may be the agreement with the bank, right? If it is a share issue, deed එක බලන්න එපා share issue එකේ. ඔයා බලන්න ඕන board minutes බලන්න ඕන. It depends on the scenario and the transaction. Based on that, you can decide your procedures. It may be TOD or ARP. ARP, different ARP are there. Some of the things I don't know. Why? I'm not expert about bank auditing. There may be different ARP. I'm expert about insurance auditing. I can tell thousands of analytics we can do for insurance audit. ARP. To do this, we should have proper information process. We have to trust upon that first and do the analytical procedures, right? I hope you are okay with this foundation. Now we are going to do procedures for each and every balances, right? Firstly, we are starting from the balance sheet process. Firstly, we are going to verify what? Tangible, non-current assets. Tangible, non-current assets. What are the tangible non-current assets? The non-current assets. This may include what? PP&E, IP, biological assets. Neither. What are the things you are going to do? Maybe PPE, IP, some of the biological assets. These are consumable biological assets. Maybe they are a biological asset. They are a biological asset. So then we are going to verify that balance, right? අපි දැන් කොහෙද ඉන්නේ කියලා තමන් දැනගන්න ඕන. ටැබ් එකේ මෙලෙක්ස් එකේ අහගෙන ඉන්න තමන් මේ අපි we are going to verify the tangible balance. We are in the process of doing audit. We had a draft financial statement. We had audit team, engagement letter. Audit team තමයි මේ කතා කරන්නේ. And then we calculate maturity level, significant accounts, and then scores. We go through with the risk assessment and with the planning document. Now we are going to start POC and substantive procedures for balances. Right? So the tangible, this balance is a significant account to the organization. Assume this is a significant account, right? One virtual company PP balance virtual company PP billion. So then Imagine you are doing a manufacturing company. What is the PP&E? Plant, right? Plant and machinery, fixed asset. So whatever if they are kind of a distribution channel, so the motor vehicle is a key element, right? For those things, what are the things you are going to check? You can decide whether you are going to use TOC approach or substantive approach. What they make a motor vehicle like that. Whether building not move that now. What TOC barabar is not there. Make a depreciation karane ka ude, approve karane ka ude. So you don't want to do that. What you have to do? You can do full substantive approach. Right? So if you have kind of a significant amount of different PP&E, you can use hybrid approach. You can do TOC and you can do substantive procedures. Right? So once you are doing your testing, you can evaluate these areas. What are the areas? Confirmation of the ownership. You have to ensure that basically the control. Inspection of non-current assets. You have to do an inspection. You have to verify the existence. Valuation by the third party or not. Right? Adequacy of the depreciation rate or amortization rate. Depreciation for PP&E, amortization for investment property, right? Whether impairments have been identified properly, accounted or not. Impairment. What is that? What does it mean to you? Impairment. Impairment can come. Whether do we need to do impairment or not? Impairment. There's a physical, tangible asset. The book value shows. The book value should show. Book values of this tangible asset should show the recoverable value. The future economic benefit should be displayed in the balance sheet. Whatever the assets in the balance sheet. So what's the indication? Asset means the equal value can be generated from long-term. The present value of future economic benefit should show as an asset. So let's say you have book value. Book value may be 50,000. Book value may be 50,000. That book value can be generated from two different sources. What are the two different sources? Order by asset taking up to benefit and pull sources they are there. What are the two sources? Whatever the asset you have, you can get these two benefits. What are they? You can sell it out and get the cash. Can use it. Value in use. Value in use. Value in use. Fair value less cost to sell and value in use. Whichever is higher. Whichever is higher can be the recoverable value. Recoverable value. A value is the recoverable value should be higher than the book value. Be higher than book value. If there is a negative gap, book value 50,000, recoverable value 40,000. There is a impairment. Book value versus recoverable value. So then you have to answer, you have to get the book value to the recoverable value. So you have to make an impairment provision of 5,000, get to the 45,000. Your balance sheet should reflect the future economic benefit, present value of future economic benefit, right? To get that, you have to make an impairment provision. You have to make an impairment testing. So as already you have to do it, that as well. So that's a concern. So these are the concerned area about this balance. Right? So what procedures you can perform? Basically, these are the procedures. So then if there's an addition, if there's a purchase, you can check capital payments were approved. For security arrangements, where non-current assets are sufficient. Security arrangement. There should be a security. For lockers should be there. And then CCTV systems are there. So these systems should be there. And then non-current assets are maintained properly. Depreciation is reviewed by every year. All income is collected from income yielding assets. These are the things under TOC you can check. And then insurance coverage you can check. And then what else? If you are in a kind of a WIP stage, work in progress stage, so that construction controls related to that construction, you can check. And percentage of completion you can check. Right? So then, what else? So then if you are dealing with some agreements, deeds, so then these approvals can be checked. You can decide related controls. And on the other hand, disposal, the part of this, so the fixed asset disposal, the approval for fixed asset disposal can be checked. Right? Is there any physical verification count annually? You can check that. The control. On the management side, there should be a physical verification count. The control. Likewise, you can check these controls. And after getting that controls, you can evaluate operating effectiveness of the control and decide scope for substantive procedures and start your substantive procedures to non-current asset. What we can do? We can physically observe. We can reconcile. Reconcile in between what? Physical count versus the general ledger versus what? Financial statement. General ledger and financial statement connected with the general ledger is the trial balance we are generating, right? So then it should be converted to financial statement disclosure. It's a kind of a manual process. In Sri Lankan countries, most cases manual process. We are getting the trial balance and preparing financial statement manually in the Excel, right? So some of the issues are there. Trial balance not adding with the financial statement. So then whatever the PP register should tally for two different things. Three different elements should be interlinked. What are they? The fixed asset register, trial balance, and the financial statement. Three things should be reconciled. Is that correct? You do not clear the content. Yes. PPA, you can see something in the register, something else in the financial statement. That's a kind of a mess, right? You can't understand what it is. So then all depreciation, capital allowance, everything. Let me see that, right? Reconciliation. Reconciliation is a key. Huh? Reconciliation. Depreciation calculation and recomputation. Right? Check source document for addition and disposal. If you have addition and disposal, you can check source document. Insurance coverage, you can check. Borrowing cost capitalization. Borrowing cost. What it means? Cost capitalization. In case 23. Borrowing cost. Borrowing cost capitalize කරන්න පුළුවන්. කියන්න වා බිල් එකක් හදන්න ණයට සල්ලි අරගෙන නම් ඒ ඉන්ට්‍රස්ට් එක capitalize කරනවා. So if you are using that borrowing for qualifying asset, there's a definition under borrowing cost standard. It's a qualifying asset only you can capitalize. Qualifying asset. The asset, we are to complete that asset, we are getting substantial period of time. It may be a fixed asset or it may be inventory. Inventory හදනවා අවුරුද්දකට වැඩි. ඔයකම කම්පැනිස් තියෙන පුළුවන් නේද? නැවක් ඉන්වෙන්ටරි වෙන කම්පැනිස් තියෙනවා. නැව හදන කම්පැනි. But so then if you take time, if you take another 2 years to finish result, right? Airbus. Then it's the kind of asset, modifying asset we can capitalize borrowing cost. Right? Disclosure requirement and accuracy of fair value estimate. Whatever the fair values you are getting, you have to calculate. So these are the basic steps we can follow under PP&E, PPNEO, IPO, whatever the standard. 16, 40, 41. Basic step you can do. But the main order they can case study you can use working. So whatever the case study you are getting, you have to have kind of understanding to use this specific guideline. You can decide, you can suggest procedures there. So then you should have a basic understanding. If there's the fixed asset, we should have kind of understanding to the physical observation. And that register should be tallied with the balances. And then depreciation should be calculated correctly. If there's addition, document should be reviewed. Likewise, you can suggest procedures. These are related procedures for fixed asset. Intangible assets, what you are going to do. Now we done with tangible asset. Then what's going on the balance sheet? Intangible asset. Physical verify what are the examples? Goodwill, development cost, trademark, software. So then you can't, this is not touchable. You can't touch. You don't have physical substance. So the goodwill, goodwill, what it means to you? Can we capitalize goodwill? Can we capitalize goodwill in the books? I know can't. As a accountant, can we recognize goodwill in the books? You are 12. Huh? Yes. And if you are having a merger acquisition or something like that, consolidation, we can. The other cases, correct. Why? The external field says internally generated goodwill and we capitalize. Internally generated goodwill. If you are starting a company, the other brand name, the goodwill we have, we can't capitalize. Capitalize to the debit goodwill account, credit card. So it's a kind of a misleading information, right? So in the Sampath Bank account, Sampath Bank balance sheet, there's no brand name, Sampath Bank brand name, there's no value. There's no value. So the Sampath Bank customer list, there's no value. Customer list එක value එකක් තියෙනවද? Customer කියන්නේ value එකක් inbuilt value එකක් තියෙන books වලට. Why? If there's a customer list, there's a value. Why? What's the value? So that customer may come to the bank again. So that's a value. That's trust we have. That trust can't be capitalized as intangible asset. That's internally generated customer list. So the internally generated customer list can't be capitalized as an asset. That receivable balance can be recognized, right? What can the internal customers receivable recognize කරගන්න උනත් නැහැ කියලා. ඒක නෙවෙයි, right? So the whatever the customer list. So then we have done say we are not doing any credit sales, right? We are doing cash sales. So as at the reporting date, we have a list of customers. that customer list can't be capitalized as asset. So that's the internal generated customer list. If you are purchasing a customer list from outside, that can be capitalized. So you are starting a new business. So you are getting a customer list, set of customers by paying from outside. So that list can be capitalized as the intangible asset. Right? Keep in mind. So then you can decide POC and substandard procedures based on whatever the scenario, whatever the TOC. Mostly you can do substandard procedures. Most of the cases. If you willing to do TOC, you can decide. So what are the TOC you can do? Approvals, board minutes, and so then calculations, goodwill calculation. People who are participating for the goodwill calculation and development cost. What it means to you. You may have R&D cost, research and development. Up until research, you have to charge to the P&L. At the stage of development, only you can capitalize as intangible asset, right? So then you have to have an ability to identify is that the research or development. Research cost only you can charge to the P&L. Development is asset. What's the logic in that? Anything clear there? එහෙම කියලා නැත්නම් මොකද කම්පැනි කරන්නේ? රිසර්ච් කර cost එක P&L දාන්න. Research කර cost එක P&L දාන්න. There's no future outcome. So the research should be go to a next level. Next level is what? Development. So then only we can have the future outcome. So then whatever the cost incurred, we can capitalize. Development, right? Research means, so there may be positive answer or negative answer. Research can be fail or pass. So the research may lead to a development. If you are doing that development, you may have the future economic benefit, then only you can capitalize. Otherwise, research comes to the sunk cost. So you can charge the P&L. So then you have to identify properly what's the research cost and the development cost. So the under case 38 clearly says, so we have criteria to evaluate that. Make a 6 or 8 criteria are there. Their case 38. Right? So then evaluation of that. So the approval for trademark, software development, all those things should be evaluated under DOC. Likewise, substandard procedures also can be done. So the amortization, like PPN, you can do substandard procedures. If there's addition, vouchers, amortization calculation, and then impairment testing, and then what else? Whatever the board minutes for the decision. Those things can be tested under substandard procedure. Recalculation of amortization. Right. So those are the procedures relating to intangible and current assets. But a goodwill calculation can be clear. Here, how can you calculate goodwill? Will take a negative value. Gain on bargain purchase. Gain on bargain purchase. That's a negative goodwill. Negative goodwill, right? You can calculate full goodwill and the proportionate goodwill. Full goodwill and the proportionate goodwill, right? Full goodwill in the sense, to the overall company you are calculating the goodwill. Proportionate goodwill can be for your just the investment. So they have done A company acquired, B company 80%. Right? You calculate goodwill for 80%, mean proportionate goodwill. If you are calculating the goodwill for the 100% for the NCI as well, NCI means National Identity Card Name, non-controlling interest. So if you are calculating 100% goodwill, full goodwill. So for calculate goodwill, you can use cost of control account. Cost of control account. If there's acquisition, you are calculating cost of control account. Wow. Grade 2 asset disposal account. Asset disposal account. So the total asset, cost, and the accumulated depreciation putting the cash receipt, and then you can calculate the profit or loss. Likewise, the acquisition, you can calculate the cost of control account. Whatever the net assets versus the consideration, calculate the goodwill. Right? Net assets versus the consideration. For our company acquired that. So then we are paying a value to that company for their net assets. Shares and return earnings. Shares and return earnings. If you are paying higher value, goodwill, right? It's a calculation, it's an estimate. Right. Coming to common balance. Inventory. Inventory na karan dekune daan datte. Case 2. हमारा में तो सब कौन नहीं किया Great. So common balance not for common for all industries. Among the industries, it's a common balance. So you don't go and search inventory balance in a bank, insurance company. They have very minimal balance, right? In a hydropower company, hydro plant, inventory adu, right? So that manufacturing company is the typical balance. Inventory. Inventory may have finished goods, materials, work in progress. Right? What are the assets that we are progressing? Distance, completeness, right and obligation, valuation, cut-off, presentation, and disclosure. Right? So we are going to audit inventory balance. Right? The manufacturing company. So firstly, we have to understand where we have inventory items. Are we having locations? What are the warehouses we have? What are the inventory items we are having? The inventory items have the location outside the location. We have to focus. What's the standard currency? Yes. Yes. And out. Yes, to the way. You can done it. To understand the company. Yes. What it says about inventory. So these are the stages: material, work in progress, finished goods. So inventory. In the balance sheet, we have a number. It consists with what? Quantity versus price. The value, right? Number of inventory items per unit cost and the inventory value. So as auditor, you have to ensure the quantity and the price. You have to ensure the quantity. To do this, you have to do a physical verification. Quantity. Price. The price you have to use. One of the candidates standard again. Cost. cost.
Lower of cost or entry level.
Or lower of cost or NRV, whichever is lower. Cost or and cost or NRV, whichever is lower. The cost and NRV, whichever is lower. Cost O. Cost and NRV, whichever is lower. Cost or NRV, whichever is lower. Oh, they can tell that they got them. That matter. Yes, it's a critical matter. O and is a 1 billion entry. Cost and O cost O should be cost and that should be clearly understood. Cost and this low. You have to critically evaluate the standard and have sharp knowledge on the standard. Otherwise, you can't do it. Cost and NRV is lower. This is really important. This is really important. This is the word, the definition. But because so take on the other maybe. We can cost and NRV. Can the guys balance and NRV which is low. Why? I am telling like that. So in the inventory balance may consist with cost plus NRV. Both may consist. You can't say that cost O NRV. If it is so, purely cost O purely NRV. Right? Let's say your inventory balance consists with different items A, B, C, D. Let's say yogurt, ice cream, fresh milk, and then milk topping. Right? So your cost may be, and the NRV may be, and then quantity. A cost 10, B cost 20, 8, 50, NRV 15, and then 25, and 5, and 10. Quantity may be 100, 150, and again 100 quantity. Right? So you have to select what's the lower value. Right? Lower value. So here, what's the lower value? Cost. Here, get cost. Here, NRV. NRV. You are using the lowest value. So now you are multiplying this 1,000, 4,000, 750, 1,000. This is the inventory value, right? This consists with cost and NRV. Agree with me? Because in for BCD, we have only NRV. For AB, we are using cost. So this total value consists with NRV and the cost, whichever is lower. NRV and the cost, whichever is lower. So that's the definition, right? If you are getting purely cost, what's the formula? Cost into quantity. But there's a difference. The difference may be really significant. Right? Why we are getting this? I did not regard that thing. So NRE is higher. Why can't we use the 15 into this? That's the reason. That is the prudent aspect in the accounting. We are not going to recognize unrealized gains, right? If there's a loss, we have to recognize immediately. So it indicates we have purchased for 8, but the net realizable value is 5. That loss should be recognized immediately. There may be a reason for this. There may be kind of a outdated item. That technology may be outdated. It can be a damaged item. That is not a discontinued labor that may be a reason for the expired date lang nila dire. Ito ni gano'n to ang expired date pa non. That's about accounting. Right. As auditor, you have a sharp knowledge about the definition of the standard, right? And again, and physical difference cannot go. ඒක අකුරක්වත් වෙනස් වෙන්න පුළුවන්. අකුරකින් වෙනස් වෙන්න පුළුවන් full equation එක. වාක්‍යයෙන් අහනවා CF4 related party එකද? CF4 related party එකද කියලා අහනවා. We have a CF4 in organization, right? Is that CF4 is a related part for that entity? CEO and CFO, 2 persons in the organization, right? CEO is a related party, CEO is not a related party. Why? Both are key management persons. Under case 24, key management person standard definition clearly says activities, this S design system. Activities of the organization. Activities mean not relevant for CFO. CFO looking at financial activities. CEO only looking at all the activities of the organization. So they have the related parties there. Based on that definition, we decide only CFO, CEO is the related party. So that sharpness should be there as a auditor and a document. Just the standard, not this definition, practical aspect. You should have that reason, right? Reason, why? Why is that? That should be very logical, right? Then only you can do proper audit, quality audit, right? Right. With this understanding, we are moving to do audit on inventory. There are definition cost, NRP. So whatever the cost we are incurring to get that inventory item to the current location, we can capitalize, we can add to that cost element, right? Net realizable value. So estimate NRV. We may have different items, right? The liquor තියෙන්න පුළුවන්, or feed meal තියෙන්න පුළුවන්, or ice cream තියෙන්න පුළුවන්. Fire factors තියෙන්න පුළුවන්. So different items may be consistent in your event. So then you have to value that and you have to get the exact number to your. That's a challenge. As auditor, you have a challenge to get a value for these items. Some of them are in, manufacturing, the work in progress stage. Some of them are material, some of them are finished goods. So you have to get a combined number after giving a correct value. So then the way you are counting, the physical observation of inventory is one step, but the usage of that may be different with the item you are going to count. The way you are using to count ice cream may differ with the way you are using count liquor. The liquor count කරන්න ගියාම බෝතලේ භාගයක් දීපුවා තියෙනවා. Count කරන්න. Shots count කරන්න වෙනවා. The shot එක material. ਉਹ material එච්චර වටින liquor තියෙනවා. ඒතකොට ඒ liquor වල number of shots use කරපු ගාන එකතු කරලා බලුවම අපේ T එක පණිනවා නම් හරියටම valuation එක දාන්න. वो අමාත්‍ය දෙපා එකකට යන්නේ නැහැ කියලා ඉන්න බෑ. ගිහිල්ලා කවුන්ට් කරන්න වෙනවා. as audit. මේ association එකේ කෙනෙක් නිසා යන්නේ නැහැ කියලා. I'm not going to do that. There's scope limitation. I'm not going to audit that.